Good afternoon, traders. Welcome to the afternoon review. Let's start with US dollar. Traders are currently expecting the headline CPI to come in at 2.8% in March and the core CPI to come in at 3.1%. But this week's CPI data is likely to have a more limited impact on the markets than the fluctuation we have seen in global trade relations. Even so, Fed officials are downplaying the direct impact of a potential trade war on the US economy, preferring to emphasize retrospective data as the key policy driver. As a result, despite recent market volatilities, the traders are pricing in a roughly 40% chance of a rate cut at the Fed's next month meeting. And despite signs of glowing growth, businesses are having to raise prices for goods and services amid continued uncertainty over the trade policy, which will put upward pressure on CPI reports in the coming month. And from a policy perspective, the combination of weak contracting growth and high inflation will create a worst-case stagflation scenario that the Fed may struggle to deal with. So let's talk about crude oil. And despite a 90-day suspension of the tariff imposed by Trump, the world's second-largest oil consumer is still imposing higher tariffs while OPEC continues to increase supply. And as a result, WTI crude oil is expected to trade within 55 to 65 range. Falling oil prices don't guarantee a recession, but they could lead to one. While oil prices reversed yesterday, the concerns about tariffs exacerbating recession fears persist. And the uncertainty around tariff decisions continue to impact the market. After Trump suspended reciprocal tariffs, the oil prices and risk assets saw a boost. However, the trade uncertainty still threatens global growth and oil demand, though the outlook has improved compared to the recent days. The ICE Brent crude oil futures, the curve reflects ongoing supply weakness. And lastly, let's talk about gold. Gold has maintained a strong gains, about $3,000, despite the improved investor sentiment following the Trump's 90-day tariff reprieve. With growing concerns about the US recession and the expectations of 425 basis point rate cut from the Federal Reserve, the demand for safe haven assets like gold, silver is likely to remain high. And it will take some time to recover from the damage caused by the tariffs, and the ongoing policy uncertainty is expected to weigh on the investment decisions, so potentially dragging down the economic growth in 2025 more than during the Trump's first administration. So that's all for today's afternoon review. Thank you for watching.